Hey everybody, we just found out that Meta beat on the top line, they beat on the bottom line. The stock is up over 10% overnight. So obviously investors really liked what they saw from Meta for Q1 2023. So we're going to do a deeper dive into their numbers to see what it's all about. And full disclosure, I am a Meta shareholder. In fact, it's one of my largest positions in my portfolio. I've been very bullish on Meta over the last few years. Unfortunately, my optimism has kind of faded a little bit over the last year, which we'll talk more about here in this video. But I'm still a shareholder, and I do think Meta is going to do well long term. So let's just jump right into the numbers and see where they fell. All right, so we're going to take a look at their presentation for Q1. You can pull this right off their investor relations website if you so desire. So a couple of things right off the bat. So the revenue came in at $28 billion. In fact, they beat on the top line, they beat on the bottom line. Earnings came in above about 7 to 8% higher than what analysts thought they were going to be. And interestingly enough, we look at Q1 2022, so a year ago, they are up. So they were at 27 billion, and then Q1 2023, 28 billion. And if we just do a quick calculation here, we can figure out how much farther up they are. So 28,101 divided by 26,998. So up around what, 4%. So not amazing growth compared to where they have been in the past. I mean, for a long time, we were seeing 30, 35, even 40% growth on the top line. But it's really slowed quite a bit over the last year. But it's still up higher than what analysts thought it was going to be overall. All right, so let's kind of go down here. Next up, I really want to talk about their segment results. So this is kind of interesting for me. And one thing I like to look at right away is the operating margin. So this last row down here. And historically, Facebook or Meta, it has been in the 40% range as far as operating margins. Their Instagram, their Facebook platforms are very, very profitable. In fact, they've been well above 40 and 45% historically from an operating margin. And you can see it's really collapsed over the last year or so. And that's because they put so much money into their AI and also the metaverse. And it's just brought down their operating margin. So it's gone from 43% Q1 2021 down to 20% actually Q3 2022 and Q4 2022. Now, this past quarter, which surprised some people, is that was at 25%. They actually slowed down some of their expenses. In particular, they slowed down their marketing expense, which really helped their bottom line overall. What's interesting, too, is that the Reality Labs division, the revenue actually dropped quite a bit. So Q1 last year at $695 million. This last quarter, it was only at $339 million. So for a company that's really transitioning to the metaverse and really AI, it's surprising to see that it's really dropped year over year. I don't think that's going to be the case forever, but you would like to see this going up, and it's not really doing so. So actually, Reels, they monetized that here recently, and that did pretty well in the quarter, which we'll talk more about later on in this video. Expenses as a percentage. So you can see marketing, for example, dropped from 14% down to 11%. The cost of revenue, which is actually interesting, dropped from 26% to 21%. Now it is almost in line from what it was about a year ago. It was at 22% a year ago. Now it's at 21%. So comparatively to their revenue, it has dropped, which is really good. That's saying that as far as what it makes to, or what it costs to make their product, or what it costs to advertise, has gone down. So that is a very, very positive thing that we saw last quarter overall. Now, as far as net income goes, they're at $5.7 billion. A year ago, at the same time, they're at 7.4. So even though stock is up quite a bit overnight, keep in mind that their stock price has dropped considerably. So that's high. It was around $380. Here today, I think it was trading around to 10ish, and then after hours, I think it's up around $230. So the stock has dropped quite a bit because you can see these numbers. The net income has dropped quite a bit, obviously, over the last few quarters. And that just strictly because they've put so much money into their AI business and the revenue has dropped. I mean, again, like I said before, the revenue was in 20, 25, 30% plus, and now it's down to single digits, which is, not, it's concerning as far as it's been a long growth type play for a lot of investors. But that's just kind of where the company is at this particular time. Now, as far as diluted earnings per share, around $2.20 this last quarter. So definitely down year over year, but certainly better than the last 2 quarters. Overall, capital expenditures, interesting. It was around $32 billion for 2022. Now, they did come out and say that for 2023, it's going to be close to that, around $30 to $33 billion. So that means their CapEx, as far as spend goes, should be about the same. So if their revenue can tick up, and they keep capital expenditures roughly the same, and they can actually reduce their cost of revenue like we saw, and even potentially sales, that should help their bottom line, over the next year. What I find really impressive is their family daily active people. It keeps going up. Over 3 billion. That's a new record for them. That's the first time they posted over 3 billion. So 3 billion people in the world, at least on one of their apps. Keep in mind that they own Instagram, they own Facebook, they own WhatsApp. So 3 billion people are at least using one of those applications, which is pretty impressive. Family monthly active people still going up, 3.8 billion. Again, that's just incredibly impressive. Overall revenue per person around $7.59 compared to a year ago at $7.72, so a little bit of a drop overall. Let's kind of go down here. And so free cash flow. This is obviously important for all companies, and that is essentially their cash from operations minus their CapEx, or what they spent on fixed assets for that particular period of time. And so for Q1 2023, they were about $7 billion. You look at a year prior, it's around 8.5 billion. Now, they did come out and say that they ended up buying back around $9 billion worth of shares for the quarter, which is really, really impressive. I'm glad to see that they did that, especially with the stock being down as much as it has been. Now, I did go pull the prepared remarks from the Meta page. So I just went through and I highlighted a few things I thought were kind of interesting. So we're not going to go through everything, but I highlighted a few things. So Mark Zuckerberg, that's what he has to say. This was a good quarter, and we are seeing growing momentum in our products and business. Our community reached the milestone that now more than 3 billion people use at least one of their apps, like we talked about. Facebook also reached the milestone of 200 million daily actives in the U.S. and Canada after last quarter reaching 2 billion daily actives worldwide. So those are some pretty impressive milestones. Reels continues to quickly grow on both Facebook and Instagram. Reels also continues to become more social with people resharing. This is important. Reels more than 2 billion times every day, doubling over the last 6 months. Reels are also increasing overall app engagement, and we believe that we are gaining share in short form video as well. So that's important because TikTok has really eaten Facebook's lunch over the last year or so. And so it's good to see that the Reels is gaining momentum, and that should help with monetization long term and hopefully keeping people on their platforms even more. And I know for me personally, when I'm on YouTube, I'll watch the YouTube Shorts quite a bit. I found myself using the YouTube or the Facebook Reels more and more. So even for me, I would say it's caught on to me, and it can be very addictive to go through those reels, interestingly enough. This is also really important. It says our AI work is also improving monetization. Reels monetization efficiency is up over 30% on Instagram and over up 40% on Facebook quarter over quarter. Daily revenue from Advantage Plus shopping campaigns is up 7 times in the last 6 months. Down here it says paid messaging on WhatsApp has grown 40% quarter over quarter. So that is one area that they just have not done a great job of monetizing, and they're really putting some efforts towards WhatsApp. Now, if you live in the United States, typically you probably won't use WhatsApp very much. It's tend to be used more outside the United States, and it's actually a pretty impressive platform. I think Facebook paid, I want to say it was almost $20 billion for this platform. So it's good to see that they're really leveraging this more, and hopefully they can continue to do that in the future, because I think that is part of their business that can actually grow quite a bit to their other parts of their business overall. Let's go down here. So finally, let's talk about AI infrastructure and CapEx. This is really important. So keep in mind that their cash has gone down from about $60 billion down to a little over $30 billion over the last quarter. Obviously, that is a ton of money still, but it shrunk by about 50% because of the amount of money that they've pumped into their AI and the metaverse over the last year. So AI infrastructure, this has been a major investment for us. A main driver of our increased CapEx spending over the past couple of years is their AI. At this point, we are no longer behind in building out our AI infrastructure, and to the contrary, we now have the capacity to do leading work in this space at scale. We are going to need to continue investing in infrastructure. So a couple of things there. So one, I think that's why we're seeing that their CapEx is going to be flat in 2023 versus 2022, because they feel like they've kind of caught up and they don't feel like they're behind anymore. But that also, they're saying that they're going to continue to spend a lot of money towards their CapEx for AI and the metaverse as well. So beyond AI and the other major technology wave, we've focused on the metaverse. We've been focusing on both AI and the metaverse for years now, and we will continue to focus on both. I would hope they'll continue to focus on the metaverse, because they changed their name to signify that they are going to become the metaverse, obviously. In the near term, we've reached a few milestones I think are worth calling out. More than 1 billion Meta avatars have been now created. Since last year, the number of titles in the Quest store with at least 25 million in revenue has doubled, and more than half of Quest daily actives now spend more than an hour using their device. The next milestone is that we are gearing up to launch our next generation consumer virtual and mixed reality device later this year. So I think that was, we have a couple more things. So they repurchased, I talked about this already, but they repurchased $9.2 billion of their Class A common stock in the first quarter, and we ended the quarter with $37 billion in cash and marketable securities. All right, so those were the numbers for Meta for Q1. Now, I kind of want to go back to what I talked about in this, beginning of this video, and that is, Meta has been my longest stock that I've owned in my portfolio, or at least what I currently hold right now. It's been in my portfolio for over 4 years at this point, and when I first bought into Facebook, now Meta, I really thought it was going to be one of the top 3 biggest companies in the entire world. I really thought it was going to be getting close to what Google is right now, or Alphabet, Microsoft, and Amazon. Really get up to that $1 trillion type market cap like these other large companies that are in that FANG group. But with them pivoting to the metaverse, I think it's really good that they're spending the money. That they've been a really poor allocator of capital. Amazon has been one of the best in the entire industry. And if you look at their cash situation, it's always really low because they're always pumping more money and buying more companies to integrate into their company itself. If you go look at their earnings report, look at all the companies they own. In fact, even right now, they're trying to buy iRobot for $1.7 billion. So they're always trying to look to the future, adding on where, Facebook historically has not done a great job on allocating its capital. Now, they did buy Instagram, which has been a fantastic buy for them. They bought WhatsApp, which I still think they can leverage better going forward as far as a profitability type standpoint. But with $60 billion in cash just sitting there, it's good that they're spending it and trying to hopefully produce more revenue in the future in a different type of revenue stream. But at this point, we really don't know what it's going to cost to get the whole metaverse going, and the amount of money they're spending on AI. I mean, $30 billion is a massive amount of money. Now, they are very fortunate enough that they can generate a ton of cash flow from their legacy platforms, Instagram, Facebook, WhatsApp. We saw last quarter almost $7 billion in free cash flow. You project out for a year, that's almost $30 billion, which almost covers their entire CapEx, which they're trying to spend for 2023. But as an investor, as the stock continues to go up, and after hours it's around $230, as that stock goes up, it doesn't look as a great investment, at least for me. And so, I'm not saying I'm going out and sell Meta at this point, but it's certainly something I'm going to consider as the stock continues to climb, because it's one of those things where I think that margin of safety or that potential growth is going to shrink. Now, when the stock is under $200 a share because their profits have dropped, their guidance has dropped, obviously the expectations have been very low for Meta over the last year. Things may start changing. We'll kind of see how things play out going forward, but certainly as it goes up, it becomes not as a great investment for me. So it's just, as an investor, I have to figure out what the risk is and the reward is by keeping this type of stock. Now, if you're interested on trying to value companies, if you don't know how to do so, I do offer through my Patreon how to value stocks. I offer a couple of different templates on there. You also get access to my Discord channel as well, and posts and videos only for my Patreon members too. So I'll put a link down to the description below if you want to go check that out. It's incredibly important, whether you learn it from me or somewhere else, to be able to value stocks, or whether it's a discounted cash flow model, 10 cap valuation, something to that effect, and learning how to analyze companies is truly, truly important overall. But, I would be very curious from you guys. I mean, what do you think about Meta right now? What is your intrinsic value you have on Meta? If you want me to do a full video on my calculation for the intrinsic value, drop down a comment below. I read every single one of those. I'd love to hear from you guys. Thanks again for watching. I really appreciate it. If you haven't done so, hit that like button on the way out, and I'll catch you on the other side. Take care, and God bless.